Question 1. Given the circumstances, Mr. Harrison noticed discrepancies between the subsidiary ledger and the general ledger after posting multiple payables invoices. He suspects an integration issue. What should Mr. Harrison do to ensure accurate financial reporting? A. Adjust the balances manually in the general ledger. B. Review and verify the subledger accounting SA configurations for app transactions. C. Delete the posted invoices and re-enter them. D. Ignore the discrepancies as they will automatically reconcile at period close. Answer. Correct answer. B. Explanation. Verifying subledger accounting and SLA configurations is critical because A controls how payables transactions generate accounting entries in the general ledger. Misconfigured rules may cause discrepancies between subledger and GL balances. Manual adjustments bypass proper audit trails and can compromise compliance. Deleting and re-entering invoices risks errors and procedural violations. Discrepancies jeopardizes reporting accuracy and may result in financial misstatements. Ensuring SA is correctly set up aligns with best practices in Oracle EBS DLAP integration and financial governance. Question 2. In the context of managing supplier agreements, Ms. Patel has several recurring payments to the same vendor for services. She wants to minimize manual invoice entry errors. Which approach best achieves this? A. Use standard invoices for each payment. B. Set up supplier agreements with recurring payment terms. C. Enter credit memos for every transaction. D. Wait until the end of the period and batch all payments manually. Answer. Correct answer. D. Explanation. Waiting until period end to batch all payments is inefficient and increases the risk of delays and errors. Standard invoices for each transaction require repetitive manual entry, which is prone to mistakes. Credit memos are used to reduce or correct existing invoices, not for recurring payments. Setting up supplier agreements with defined recurring payment terms allows automated invoice generation, ensures consistency, reduces errors, and enforces contractual obligations. Oracle Payables recommends agreements for predictable, recurring payables to enhance efficiency and internal control. Question 3. Considering the evidence, Mr. Nguyen is configuring a new ledger in Oracle EBS and must select options for currency, calendar, and accounting method. Which principle should guide his decisions to ensure proper ledger setup? A. Match the ledger to operational needs, reporting requirements, and statutory compliance. B. Default to the company's base currency and calendar, ignoring local reporting rules. C. Create multiple ledgers with identical settings for redundancy. D. Use temporary settings and adjust them post-transactions. Answer. Correct answer. A. Explanation. Ledger setup should align with operational requirements, reporting needs, and statutory compliance. Currency calendar and accounting methods define how financial transactions are recorded, reported, and consolidated. Defaulting to base settings may ignore legal and tax reporting requirements. Creating redundant ledgers introduces complexity without benefit, and changing settings post-transactions can create inconsistencies and errors. Oracle EBS recommends carefully planned ledger configurations to ensure accurate financial management, reporting, and compliance with internal and external regulations. Question 4. Through the lens of period close processes, Alvarez is performing reconciliations at month end and identifies that some payables invoices were not transferred to the general ledger. What should be her first step? A. Repost the subledger transactions to the general ledger. B. Ignore them until the next period close. C. Manually enter journal entries to adjust balances. D. Delete the transactions from the subledger. Answer. Correct answer. C. Explanation. Manual journal entries should generally be avoided unless subledger corrections fail. However, in scenarios where payables invoices are missing from the GL, reviewing SA postings is essential. Reposting subledger transactions ensures proper transfer of accounting entries while preserving audit trails. Ignoring the issue compromises period-end reporting, and deleting transactions violates data integrity principles. Properly handling unposted invoices through review, correction, and adjustments maintains accurate reconciliations and supports compliance with accounting best practices and Oracle EBS internal controls. Question 5. From a practical standpoint, ISTA notices that the supplier's bank account details are outdated, causing payment failure. What is the most effective course of action? A. Send the payment to the outdated account and hope it processes. B. Update the supplier's banking information and rerun the payment batch. C. Cancel the payment permanently. D. Create manual check outside Oracle EBS to bypass the system. Answer. Correct answer. C. Explanation. Updating the supplier's banking information ensures accurate payment processing and maintains system integrity. Sending payments to an outdated account risks funds being misdirected, potentially causing financial losses and regulatory issues. Canceling the payment permanently without corrective action disrupts the procure-to-pay cycle and damages vendor relationships. Manual checks outside the system bypass Oracle's controls and audit trails. Oracle Payables recommends maintaining accurate supplier banking details and using batch reprocessing for failed payments to comply with internal controls and streamline payment management. Question 6. Which of the following describes a key consideration when performing three-way matching of invoices in Payables as illustrated by Is Robinson's case of high-volume PO transactions? A. Match only the invoice and purchase order amounts. B. Compare invoice, purchase order, and receiving receipts for consistency. C. Rely solely on supplier self-certification. D. Ignore discrepancies unless they exceed $10,000. Answer. Correct answer. B. Explanation. Three-way matching compares the invoice, purchase order, and receiving receipts to ensure that payment is made for goods and services actually received at agreed-upon prices. Matching only the invoice and purchase order ignores receipt confirmation, risking overpayment or incorrect payment. Supplier self-certification lacks internal verification and fails internal control standards, ignoring minor discrepancies under reconciliation and audit requirements. Oracle Payables promotes three-way matching to maintain compliance, enforce accountability, and minimize financial and operational risks during procure-to-pay processes. Question 7. When analyzing intercompany accounting, Mr. Kumar observes that transactions between subsidiaries are not balancing at consolidation. What best practice should he follow? A. Record intercompany transactions manually in the GL of each entity. B. Ensure intercompany setups, including intercompany accounts and eliminations, are correctly configured. C. Ignore imbalances and reconcile at year-end. D. Use random ledger adjustments to force balances. Answer. Correct answer. C. Explanation. Proper intercompany setup involves defining intercompany accounts, trading relationships, and elimination rules to ensure accurate consolidation. Manual GL entries bypass automated controls and risk double counting or errors. Ignoring imbalances delays error detection, jeopardizing financial reporting integrity. Random adjustments compromise audit trails and compliance. Oracle EBS Intercompany Accounting emphasizes structured configurations for systematic transaction posting and elimination, enabling precise consolidated reporting, improved internal control, and adherence to accounting standards across multiple entities. Question 8. In light of recent developments, Is Fernandez wants to limit user access to sensitive payables data. Which approach aligns with Oracle's best practices? A. Assign roles broadly to all app clerks. B. Implement role-based access control RBAC to restrict access by function. C. Allow unrestricted access to promote flexibility. D. Rely on individual judgment to determine access. Answer. Correct answer. D. Explanation. Role-based access control RBAC is a security best practice in Oracle EBS, allowing access to be granted based on roles and responsibilities. Broadly assigning roles exposes sensitive data and increases fraud risk. Unrestricted access undermines internal controls, while relying on personal judgment is inconsistent and unmanageable. RBAC ensures compliance with corporate governance, maintains segregation of duties, and protects critical financial information. Properly configured roles, privileges, and responsibilities enhance operational security, enforce accountability, and prevent unauthorized data manipulation in the Payables module. Question 9. For the purpose of financial reporting, Mr. Thompson needs to generate consolidated reports including both app and GL data. Which approach ensures the accuracy and completeness of these reports? A. Extract data separately and manually reconcile outside Oracle EBS. B. Utilize cross-module reporting tools and predefined report templates. C. Only review the general ledger balances. D. Generate app reports independently and combine with GL spreadsheets. Answer. Correct answer, A. Explanation. Cross-module reporting and predefined templates allow Oracle EBS users to consolidate app and GL data efficiently, ensuring completeness and reducing errors. Manually extracting and reconciling data increases the chance of discrepancies, delays reporting, and diminishes reliability. Reviewing only GL ignores subledger details, which can mask unposted or misallocated transactions. Combining reports creates reconciliation burdens and risks inconsistencies. Using integrated reporting tools leverages automated links between modules, adheres to internal control standards, and ensures accurate financial reporting and regulatory compliance. Question 10. While examining tax calculations, Gomez finds that invoice taxes are inconsistent with configured rates. What is the recommended course of action to prevent ongoing errors? A. Manually adjust tax amounts on each invoice. B. Review and correct the tax code setup and apply updates systematically. C. Ignore small variances to save time. D. Re-enter all invoices with different descriptions. Answer. Correct answer. B. Explanation. Reviewing and correcting tax code configurations ensures that invoices reflect accurate calculations consistently. Manual adjustments are time-consuming, error-prone, and violate audit standards. Ignoring discrepancies risks regulatory non-compliance and financial misstatements. Re-entering invoices does not address underlying configuration errors. Oracle Payables recommends systematic configuration management for tax codes, rates, and rules, which ensures automated, consistent tax application, minimizes errors, and adheres to statutory requirements, enhancing financial integrity and operational efficiency. Question 11. From multiple perspectives, Chen notices frequent mismatches between invoices and purchase orders in a high-volume app environment. What is the most effective way to reduce these discrepancies? A. Implement two-way or three-way matching based on the nature of transactions. B. Ignore discrepancies under $50 to speed processing. C. Allow manual approvals without validation checks. D. Process all invoices without referencing POS. Answer. Correct answer, A. Explanation. Implementing two-way or three-way matching ensures that invoices are validated against purchase orders and, when required, receiving documents. This prevents overpayments, underpayments, or unauthorized expenditures. Ignoring minor discrepancies may overlook cumulative errors. Manual approvals without validation increase risk of errors and reduce internal control. Processing invoices without PO reference bypasses step controls. Oracle Payables promotes automated matching to enforce compliance, enhance accuracy, and maintain audit trails while streamlining the procure-to-pay process. Question 12. While examining expense reports, Rivera finds that several employee reimbursements exceed policy limits. How should Oracle EBS handle these transactions? A. Post all expenses without checks to maintain speed. B. Route out of policy expenses for approval and apply validations automatically. C. Reject all employee expense reports to enforce strict compliance. D. Manually calculate limits outside the system and adjust later. Answer. Correct answer, C. Explanation. Routing out of policy expenses for approval ensures that exceptions are reviewed without halting compliant transactions. Posting all expenses without checks risks policy violations and audit issues. Rejecting all reports is overly restrictive and may frustrate employees. Manual adjustments outside the system compromise audit trails and increase error likelihood. Oracle Payables integrates policy rules to enforce expense limits automatically, streamlining approvals, maintaining compliance, and providing an auditable record for regulatory and internal control purposes, ensuring financial governance and accuracy. Question 13. Considering the evidence Mr. Thompson is setting up a multi-currency ledger, what must he ensure to maintain accurate accounting entries? A. Assign the same currency to all ledgers regardless of reporting requirements. B. Configure currency conversion rates and rules accurately for each ledger. C. Enter transactions only in the functional currency and ignore reporting currencies. D. Avoid adjustments for currency fluctuations. Answer. Correct answer, B. Explanation. Configuring currency conversion rates and rules ensures that transactions are accurately recorded in both functional and reporting currencies. Ignoring reporting currencies may result in misstatements and regulatory non-compliance. Assigning the same currency to all ledgers ignores operational requirements and consolidation needs. Avoiding adjustments for fluctuations exposes the company to inaccurate finance statements. Oracle EBS best practices mandate precise multi-currency configuration to support accurate consolidation, consistent reporting, and adherence to accounting standards, especially in global operations. Question 14. Which of the following best illustrates a critical step when performing period-end reconciliations for payables and GL as faced by Is O'Neill? They reconcile subledger totals to GL balances and investigate any variances. B. Only reconcile balances at the end of the fiscal year. C. Skip reconciliation for minor variances to save time. D. Just GL balances manually without reference to subledger. Answer. Correct answer. D. Explanation. Reconciling subledger totals to GL balances is crucial to ensure that all transactions are accurately reflected in financial reports. Skipping reconciliation until year-end or ignoring minor variances can lead to undetected errors. Manually adjusting GL balances without reference to the subledger bypasses audit trails and internal controls. Oracle EBS emphasizes reconciliation and variance analysis as a key control activity to maintain financial integrity, facilitate accurate reporting, and ensure compliance with accounting policies, regulations, and corporate governance standards. Question 15. Based on the information Mr. Singh is creating a supplier record for a new vendor with multiple remittance addresses, what is the best practice in Oracle Payables? A. Create a single supplier record and multiple sites for remittance locations. B. Create separate suppliers for each remittance address. C. Ignore remittance addresses and rely on default payment methods. D. Enter addresses in a free text field without system validation. Answer. Correct answer. A. Explanation. Creating a single supplier record with multiple sites allows the organization to manage remittance addresses efficiently while preserving auditability. Separate supplier records for each address increase data redundancy and risk inconsistent reporting. Ignoring remittance addresses may result in misdirected payments and reconciliation issues. Free text entry lacks validation, increasing the chance of errors. Oracle Payables recommends structured supplier site management to ensure accurate payments, streamline processing, and maintain internal controls for vendor data integrity. Question 16. With respect to intercompany accounting, Is Baker notices that certain intercompany invoices are not eliminated during consolidation. What should be her first action? A. Verify that intercompany accounts and elimination rules are correctly configured. B. Manually adjust the consolidated financial statements. C. Ignore the issue until year-end audit. D. Delete intercompany transactions from subsidiary ledgers. Answer. Correct answer. B. Explanation. Verifying intercompany accounts and elimination rules is essential to ensure automatic elimination of transactions during consolidation. Manually adjusting consolidated statements may fix the numbers, but bypasses system controls and auditability. Ignoring the issue risks misstatements and regulatory non-compliance. Deleting transactions compromises subledger integrity. Oracle EBS intercompany accounting best practices focus on systematic setup, automated elimination, and reconciliation processes to ensure accurate consolidated reporting, reduce manual intervention, and maintain compliance with accounting standards. Question 17. According to recent studies, Mr. Alvarez wants to prevent duplicate invoice payments. Which approach aligns with Oracle EBS best practices? A. Enable duplicate invoice validation and define tolerance rules. B. Process all invoices without system checks. C. Rely on manual review only. D. Ignore potential duplicates if amounts are small. Answer. Correct answer. C. Explanation. Enabling duplicate invoice validation with tolerance rules is a key control to prevent accidental double payments. Processing invoices without checks undermines internal control and increases financial risk. Manual review alone is inefficient, prone to errors, and may fail in high-volume environments. Ignoring small duplicates can lead to cumulative losses and compliance issues. Oracle Payables recommends a combination of system validation, tolerance thresholds, and exception handling to prevent duplicates while maintaining efficiency and compliance with internal policies and audit standards. Question 18. Under the assumption that Morgan needs to generate GL reports including app transactions for internal audit, which method is most reliable? A. Use cross-module reporting tools within Oracle EBS. B. Export app and GL data separately and reconcile externally. C. Review GL balances only. D. Use spreadsheets without system validation. Answer. Correct answer. D. Explanation. Cross-module reporting ensures accuracy, completeness, and consistency by automatically pulling data from both app and GL. Exporting and reconciling externally introduces manual errors and reduces auditability. Reviewing GL balances only ignores sub-ledger detail, potentially missing unposted or misallocated transactions. Spreadsheets without validation bypass Oracle's internal controls, increasing risk. Using integrated reporting tools aligns with best practices by leveraging automated data consolidation, ensuring reliable audit reports, and maintaining compliance with internal and external financial reporting standards. Question 19. In an effort to comply with company policies, Mr. Jackson wants to ensure that only authorized users can process payments. Which practice is recommended? A. Assign payment responsibilities using role-based access control RBAC. B. Give all app clerks full access to all payment functions. C. Allow users to determine their own access levels. D. Use paper approval instead of system roles. Answer. Correct answer. A. Explanation. RBAC allows access to payment functions based on user roles, responsibilities, and segregation of duties. Providing all app clerks full access increases fraud risk and violates internal controls. Allowing users to self-determine access is inconsistent and unmanageable. Paper approvals alone do not enforce system controls or audit trails. Oracle Payables best practices recommend implementing RBAC to enforce segregation of duties, prevent unauthorized transactions, enhance security, and maintain compliance with internal policies and regulatory requirements. Question 20. While evaluating AS setups, Is Patel notices certain app transactions are not generating expected accounting entries in the GL. What should she verify first? A. Review AA rules and account derivation sets for app transactions. B. Repost transactions manually in GL. C. Delete unposted app transactions. D. Ignore the missing entries as exceptions are acceptable. Answer. Correct answer. B. Explanation. Reviewing SA rules and account derivation sets ensures that app transactions correctly generate GL entries. Manual reposting may temporarily fix the issue but does not address root cause, risking recurring errors. Deleting unposted transactions violates data integrity and audit standards. Ignoring missing entries undermines period-end reporting and compliance. Oracle EBS recommends careful AA configuration review and testing, ensuring transactions post accurately, financial statements are correct, and the organization maintains audit-ready compliant accounting practices. Question 21. Taking into account recent changes in reporting standards, Mr. Dawson notices that certain app invoices are posted to the wrong accounting period. What is the best approach to prevent this issue? A. Just the period manually in GL after posting. B. Ensure that invoice dates and period controls are properly configured in Payables. C. Ignore minor period mismatches until year-end. D. Delete the invoices and re-enter them. Answer. Correct answer. B. Explanation. Configuring invoice dates and period controls ensures that transactions are posted to the correct accounting period automatically, maintaining accurate financial reporting. Manually adjusting periods post-posting risks errors and breaks audit trails. Ignoring mismatches can accumulate reporting errors and compromise compliance. Deleting and re-entering invoices introduces inefficiencies and increases error risk. Oracle Payables best practices recommend configuring period controls and transaction validations to enforce accuracy, internal control, and adherence to corporate and regulatory accounting requirements. Question 22. While evaluating supplier payments, Is Robinson notices duplicate payments being processed for the same invoice. Which step aligns with best practices to prevent this? A. Enable duplicate invoice validation and review exceptions. B. Process all invoices regardless of system warnings. C. Perform manual review only after payments are completed. D. Ignore duplicates under $100 to save time. Answer. Correct answer, D. Explanation. Enabling duplicate invoice validation is essential for automated prevention, ensuring that system checks flag potential duplicates before payment. Processing all invoices without checking or relying solely on manual review increases the likelihood of overpayment and audit issues. Ignoring minor duplicates can lead to cumulative financial losses and non-compliance with internal controls. Oracle Payables recommends combining automated duplicate checks with exception handling to maintain accurate payables, preserve audit trails, and enhance overall control over vendor payments while reducing operational risk. Question 23. In the context of intercompany accounting, Mr. Ahmed finds that certain transactions between subsidiaries are not reflected correctly in consolidation. What is the recommended action? A. Verify intercompany account mapping and elimination rules. B. Manually adjust consolidated financial statements. C. Ignore until year-end audit. D. Delete offending transactions from subsidiary ledgers. Answer. Correct answer, A. Explanation. Proper intercompany account mapping and elimination rules ensure automatic adjustment of transactions during consolidation. Manually adjusting consolidated statements bypasses automated controls and risks inconsistencies. Ignoring issues delays error detection, compromising reporting accuracy. Deleting transactions violates subledger integrity and audit requirements. Oracle EBS intercompany accounting best practices emphasize correct system setup for intercompany accounts, balancing entries, and elimination rules, ensuring accurate consolidation, compliance with accounting standards, and efficient reconciliation across multiple entities. Question 24. Given the circumstances, is notices that certain app invoices are not generating the expected accounting entries in the general ledger. What should she verify first? A. Checks error rules and account derivation sets for accuracy. B. Delete the unposted invoices and re-enter them. C. Ignore as exceptions will balance out over time. D. Manually post journal entries in GL without reference to subledger. Answer. Correct answer, C. Explanation. Reviewing SA rules and account derivation sets ensures that app transactions are correctly mapped to GL accounts. Deleting invoices risks losing critical financial data and audit integrity. Ignoring missing entries is inappropriate, as unposted transactions can lead to inaccurate reporting and non-compliance. Manual journal entries bypass automated controls and subledger integrity. Oracle Payables best practices focus on thorough AA configuration and testing, ensuring all app transactions generate accurate accounting entries, supporting accurate reporting, internal control, and audit readiness in alignment with financial governance standards. Question 25. Demonstrated by Mr. Wilson's experience, employees frequently submit expense reports exceeding company policy limits. Which approach should be implemented to enforce compliance? A. Configure automated policy validations and route exceptions for approval. B. Post all expenses without validation for speed. C. Reject all expense reports to maintain strict compliance. D. Approve expenses manually without system checks. Answer. Correct answer, A. Explanation. Automated policy validation ensures that expenses exceeding limits are flagged and routed for managerial approval, maintaining compliance while allowing legitimate exceptions. Posting all expenses without validation compromises internal controls and may violate policy. Rejecting all reports is overly restrictive and may disrupt operations. Manual approval without system validation is prone to errors. Inconsistent enforcement. Oracle Payables recommends integrating automated expense validations to streamline approvals, reduce errors, and provide audit trails that enforce company policies and financial governance best practices. Question 26. In terms of supplier management, Jackson needs to maintain accurate banking details for multiple vendors. What is the best practice in Oracle Payables? A. Create separate supplier records for each bank account. B. Maintain multiple supplier sites under a single supplier record. C. Enter banking details in free text fields without system validation. D. Ignore updates unless payments fail. Answer. Correct answer. B. Explanation. Maintaining multiple supplier sites under a single record allows efficient management of remittance addresses and banking details, reduces redundancy, and preserves auditability. Separate supplier records create unnecessary duplicates and inconsistencies. Free text fields risk errors and prevent system validation. Ignoring updates increases the risk of payment failures. Oracle Payables best practices recommend structured supplier site management for accurate, compliant, and efficient payment processing, ensuring that vendor data is current and internal controls are maintained. Question 27. Through careful analysis of period close processes, Chen observes unposted app transactions delaying month-end reconciliation. What is the most appropriate first step? A. Verify A postings and repost transactions if necessary. B. Manually adjust GL balances to match expected totals. C. Delete unposted app transactions. D. Ignore unposted transactions as they will clear automatically. Answer. Correct answer. D. Explanation. Verifying SA postings ensures that app transactions are correctly posted to the GL, maintaining integrity and accurate financial reporting. Manually adjusting GL balances risks audit violations and breaks the audit trail. Deleting transactions compromises subledger integrity and compliance. Ignoring transactions is inappropriate, as unposted items can cause reporting errors. Oracle Payables recommends routine monitoring of SA posting, reconciliation procedures, and exception handling to maintain proper period close controls, accurate reporting, and adherence to accounting standards. Question 20. While evaluating GL to app integration, Roberts notices discrepancies in transferred amounts. What is the recommended approach to resolve this issue? A. Review SA rules and transaction mapping for app to GL integration. B. Manually adjust GL balances without referencing subledger. C. Ignore the discrepancies until the annual audit. D. Delete app transactions and re-enter them. Answer. Correct answer. B. Explanation. Reviewing SA rules and transaction mapping ensures app invoices and payments are correctly reflected in the GL. Manually adjusting GL balances without subledger reference bypasses system controls, creates audit issues, and risks recurring errors. Ignoring discrepancies undermines accurate reporting and internal control. Deleting transactions destroys data integrity and breaks reconciliation. Oracle Payables best practices emphasize accurate A setup and systematic reconciliation to maintain financial accuracy, internal control, and compliance with accounting standards across modules. Question 29. From a practical standpoint, Gupta wants to ensure only authorized users process supplier payments. Which Oracle EBS practice is most appropriate? A. Implement role-based access control RBAC aligned with job responsibilities. B. Grant all app clerks full access to payment processing. C. Allow users to self-determine access levels. D. Use paper approvals without system access restrictions. Answer. Correct answer. C. Explanation. RBAC aligns system access with roles and responsibilities, enforcing segregation of duties and protecting against fraud. Granting full access to all app clerks increases risk. Allowing users to self-determine access is inconsistent and non-compliant. Paper approvals alone do not enforce digital controls or create audit trails. Oracle Payables best practices recommend RBAC to control access systematically, maintain compliance, and safeguard financial data, ensuring that only authorized personnel can initiate, approve, and process payments in alignment with internal policies and regulatory requirements. Question 30. In a modern context of tax setup, Thompson notices inconsistencies in invoice tax calculations. What is the best corrective approach here? Manually adjust tax amounts on each invoice. B. Review and update tax codes, rates, and rules in Payables. C. Ignore minor differences to save time. D. Re-enter invoices with different descriptions. Answer. Correct answer. A. Explanation. Correctly configuring tax codes, rates, and rules ensures automated and consistent tax calculations across invoices. Manual adjustments are inefficient and prone to error but may be necessary for exceptional corrections. Ignoring differences can result in non-compliance and reporting inaccuracies. Re-entering invoices does not resolve the underlying configuration issue and increases workload. Oracle Payables best practices recommend proper tax configuration, validation, and exception handling to maintain compliance, accuracy, and audit-ready accounting records while minimizing operational errors.